प्रॉफिट तो दिखा दिया, बट भाई पैसा कहां है? This is another content-based video on the value investing series from the WallStreet School. Welcome to the world of free cash flows to the firm, or as I would like to call it, असली पैसा जो बिजनेस के पास बचा है सब कुछ चुकाने के बाद. Because let's be honest, a profit and loss account can look great, net profit can shine bright, but unless there's actual cash flowing, you're not running business, you're running a Netflix drama series. In this video, we'll understand what free cash flows to the firm actually means, how it's different from regular profits, and how to calculate it step by step using real numbers from a company's financials. And no, it's just not for finance nerds. If you're into valuations, investing, or even running a business, knowing free cash flows to the firm is like knowing whether you can actually afford an EMI or you're just vibing on credit cards. So let's dive in and watch it till the end for you to actually understand what it actually means and how do you actually comprehend it from the company's perspective. Let's figure out whether your business is truly cash rich or just pretending it to the public. Let's understand the difference between being good or just looking good. Friends, welcome back. We have invested a considerable time into the income statement, cash flows, and the balance sheet, right? These were the three bonds that we discussed in the initial phase also, right? Now I want to go back to the cash flow statements. My cash flow from operations, my cash flow from investing, and my cash flow from financing. These are my three cash flow statements, okay, which gives me ultimately the closing cash balance, right? I want to tell you why cash flow statements is perhaps the most important statements of all the statements, right? Because ultimately cash is the king. Like the cash flow statement gives us a picture of the true cash position of the company. And a legitimate company has three main activities: operating, investing, and financing. And each activity either generates or drains money from the company. So investors should specifically look into the cash flow from operations कि कंपनी ने अपने ऑपरेशन से कितना पैसा अर्न किया. Okay, and when the liabilities increase, cash level increases. When the assets increases, cash level decreases, and vice versa. We saw that at fund flow statements. My assets go up, my cash flow from operations go down. My liabilities go up, my cash flow from operations has to go up. Okay, and many companies that report profits on papers on the profit and loss account, without backing it up with the cash flow statements, they have faced bankruptcies, destroying wealth for the shareholders. We saw so many examples in the previous videos, right? So cash flow from operations plays one of the most important part. So investors and analysts focus a lot on the cash flows, and as investors, that is perhaps the most critical needs. A lot of startups, lot of stories which are told to us, but till that time, these do not become profitable, these do not start generating cash, they will always remain good stories or fancy stories. And our wealth creation will always remains in a fancy world. Let's be real. Till the time the cash is not generated, it's all noise. It's all nuisance. Okay. So this is the income statement which we discussed. Income statement, फटाफट से रट्टा. Sales minus cost of goods sold gives me my gross profit, less selling general and administrative expenses gives me my EBITDA, minus depreciation and amortizations gives me my EBIT, minus interest cost gives me my profit before tax, minus tax gives me my net profits. This net profit is meant for the equity shareholders, right? And you can either pay dividends or you retain it as a reserve. You also have your cash flow statements, which we just discussed: cash flow from operations, cash flow from investing, cash flow from financing. Now, friends, we have invested a considerable time into doing the income statement, the cash flows, and the balance sheet. Now think through it. Let's talk of all the items because of which the cash went up or because of which the cash went down. I'm essentially trying to find out is the cash which is freely available to the firm. The cash which is freely available to the firm. That means what? That means what? Is it this cash? Is it this cash which is the closing cash balance which goes to the balance sheet? Is this freely cash which is available to the firm? This goes to the balance sheet. Is this the cash which is freely available to the firm? Answer is no. So what is the cash which is freely available to the firm? Okay, let me give you an analogy. Himanshu Jain earns his salary from the WallStreet School. He uses his salary for his household expenses and his children's education. And there is some cash which remains with him after that. From that cash, he invests into stocks, he invests into mutual funds, he invests into cryptos, he invests into PPF, whatever. And then there is some cash which remains with him at the end. So what is the real net worth of Himanshu Jain? Option 1. Is it his salary minus his household expenses minus his children's education? That's option number 1. Or option number 2. Is it his salary minus his household expenses minus his children's education minus all the investments which he has done, and then the cash which remains with him at the end? That is option 2. So which is the right option? Is it option 1 or is it option 2? You would all agree that it is option 1, which is his salary minus his household expenses minus his children's education. उसके बाद जो भी बचा वो उसका पैसा है, वो उसको जैसे मर्जी यूज करे. Then that is his net worth, right? So we have invested considerable time into discussing about the income statement, the cash flows, and the balance sheet. Let's start from the beginning. Let's talk of all the items because of which the cash went up or because of which the cash went down. Sales. Because of sales, there was an inflow of cash. Cost of goods sold, there was an outflow of cash. Gross profit, I have earned. This is the gross profit which I have earned. Minus selling, general and administrative expenses, there was an outflow of cash. So till EBITDA, whatever I have earned, that's the real cash. That's the real cash. Till EBITDA, whatever I have earned, that's the real cash. Minus depreciation and amortization, that is a non-cash expense. It's a non-cash expense. I mean, I didn't go to the market and said to the shopkeeper कि boss मुझे depreciation दे देना यार 20 रुपए का. नहीं बोला ना मैंने. It's a non-cash expense. It is a capital खर्चा जिसको मैं over a period of time apportion कर रहा हूँ अपने profit and loss account के अंदर. ठीक है. So till EBIT, whatever I have earned, that's the real cash, except for one item called depreciation and amortization. तो एक situation लेते हैं. Let's understand this and practically understand this. Suppose there is a profit and loss account. I have sales of 100. I have selling, general and administrative expenses of 20. और कुछ भी नहीं है. So my profit before tax, it is 80. I have tax of 30%, 24. So what's my profit after tax? It is 56. Let's take situation. This is situation number 1. Let's take situation number 2. I have a profit and loss account. I have sales of 100. I have selling, general and administrative expenses of 20. I have depreciation also of 20. I have profit before tax of 60. I have tax rate at 30%, 18. My profit after tax, it's 42. So what's the difference between situation 1 and situation 2? There is an additional expense of depreciation in this situation, but ultimately in my net profits What's the difference? The difference in my net profits is of 14 rupees because I got some tax benefit on this additional expense of 20 rupees. I got some tax benefit. So ultimately, I mean, the expense was of 20 rupees, but ultimately, how much did I actually incur? Into, so 20 into 1 minus the tax rate of 30%. So it's 20 into 70%. 20 into 70%. It is 14 rupees. Understood? So to understand this well, what I'm saying is, you have this data in front of you. Let me do this in Excel over here. So till EBIT, whatever I have earned is the real cash. I need to pay taxes on my operating profit. This is my operating profit, so I need to pay taxes on it. I pay taxes on it. So this is less tax on EBIT. My tax on EBIT. So what I get is, if you see the English of this, what I get is my earnings before interest, after tax. My earnings before interest, after tax. EBIT less taxes on EBIT. This is my earnings before interest, after tax. In accounting parlance, this term is called as my NOPAT, my net operating profit after tax. Net operating profit after tax. And in this EBIT, your depreciation and amortization was already subtracted. So let's add it, because I got some tax benefit and it's a non-cash item. As I add depreciation and amortization, because it's a non-cash item, and I'm going to find out the real cash which is available to the firm, the free cash flows to the firm, the cash which is freely available at a firm level. Now I go back. This is this, or कौन सी item है because of which the cash went up or because of which the cash went down? You did capex. You did capex. Because of this capex, the cash went out of the business. You set up a building, you set up a plant, the capex went out of the business. You said add net capex. And why I'm saying add, because by default this will be a negative number. So you said add net capex. So by default this will be a negative number. So by default this will get subtracted. And what else? और कौन सी ऐसी item है because of which the cash went up or because of which the cash went down? There is this item called changes in my working capital. If you remember, an increase in my working capital leads to a fall in my cash flows and vice versa. Add less changes in my working capital. What else? What else? I'm trying to find out the free cash which is available to me as a firm. आप कुछ भी और उठा लीजिए, you'll not get any other item because everything is over here. If you talk of interest cost or debt raised or debt repaid, first of all the firm should have free cash. उसमें से you're going to pay the interest, you're going to pay the debt, you're going to raise the debt, you're going to repay the debt. उसके बाद जो बचा वो इक्विटी के लिए बचा. इक्विटी का तुम डिविडेंड्स पे करो, जो मर्जी करो या रिजर्व्स में डालो. But I'm trying to find out the free cash which is available to me as a firm. This, friends, is universally accepted definition. This part is universally accepted definition of your free cash flows to the firm. your free cash flows to the firm. The cash which is freely available at a firm level. I've given this definition of free cash flows to you from the perspective of operating profit. Let me give the definition of this from the perspective of net profits. I said what? It is, from the net profit perspective, it is my net profits I said add interest cost net of tax. My interest cost net of tax. I said add depreciation and amortization. I said add less changes in working capital. I said add net capex. Friends, this also is a universally accepted definition of free cash flows to the firm. A universally accepted definition of free cash flows to the firm. Now you see this here. You have depreciation and amortization here. You also have depreciation and amortization here. Both of them are over here. You have changes in working capital here. You also have changes in working capital here. You have capex here. You also have capex here. Now in your net profits, if you add back the interest cost net of tax, in your net profits, if you add back interest cost net of tax, this is nothing but your earnings before interest after tax. I mean, see the English, net profits plus interest cost net of tax. So it is nothing but your earnings before interest after tax, which is nothing but my NOPAT, my net operating profit after tax, my net operating profit after tax, right? So it's the same thing. Now let's elaborate this a little more. Let's elaborate this a little more. Your net profits plus interest cost plus depreciation plus minus changes in working capital. This is what? This part is what? This part is nothing but your cash flow from operations. This part is your cash flow from operations. Your net profit plus interest cost plus depreciation and plus or minus changes in working capital. This is your cash flow from operations. What is your net capex? It is your nothing but your cash flow from investing. So your free cash flows to the firm is nothing but your cash flow from operations and your cash flows. So your free cash flows to the firm is nothing but your cash flow from operations plus your cash flow from investing. My free cash flows to the firm is the cash flow from operations plus your cash flow from investing. Now understand this and understand this well. Himanshu Jain's net worth in the previous few minutes, what I said is it is his salary minus his household expenses minus his children's education, and whatever remains, that is his. Same thing for free cash flows to the firm. It is my salary minus household expenses minus my children's education, then उसके बाद जो बचा वो मेरा है, right? ये वाला जो कैश है यहाँ पे in the balance sheet, ये वाला जो cash, this cash over here, this is Himanshu Jain's salary minus his household expenses minus his children's education minus all the investments which he has done, right? Because this is nothing but this cash flow from operations plus cash flow from investing plus cash flow from financing, उसके बाद का closing balance. That is not my net worth. My real net worth is my salary minus household expenses minus my children's education. Essentially, मेरा कितना पैसा लगा अपने बिजनेस को हरकत में लाने के लिए, by setting up a building, plant, machinery, etc. Once that business was into a harakat, then I started generating sales. I started having some operating costs. I started having the selling, general and the administrative expenses. I started having my EBITDA, and then I had my depreciation and amortization. I had this EBIT, and then I paid the interest. I got my taxes paid. I had my net profits. On this net profit, I added back depreciation because it was a non-cash expense. I added back interest cost because it's a part of the financing cost. Plus minus changes in working capital essentially gives me the cash which I have earned from the operations of the firm. That is the return which I have earned on the investment which I have done. So free cash flows to the firm is nothing but the delta, the difference between return on capital and cost of capital. Free cash flows to the firm is nothing but cash flow from operations plus cash flow from investing, because investing will be by default with a negative sign. So it's cash flow from operations plus cash flow for investing. Himanshu Jain's net worth is his salary minus his household expenses minus his children's education. Free cash flows to the firm is the delta, the difference between return on cost and return on capital and cost of capital. So higher the delta, higher the difference between return on capital and cost of capital, those companies generate significant wealth for itself and for its shareholders over a period of time. Those companies, friends, are great companies. We have discussed good, we have discussed gruesome. I said previously that I'm going to reserve my comments for great companies. Those companies are great companies which have the delta between return and cost, and those companies which continuous basis per keep on generating that delta between return on capital and cost of capital, those companies create significant wealth for itself and for its shareholders. So in the next video, let's discuss conceptually about the free cash flows to the firm in the context of the Indian companies. For now, I hope the definition is clear. For free cash flows, it is from the EBIT perspective. Let's do a fatafat se ratta wala thing. Your EBIT, less taxes on EBIT, because on operations you need to pay taxes. You get your operating, you get your NOPAT, net operating profit after tax, plus depreciation and amortization will give you your net capex plus minus changes in working capital. This will give you your free cash flows to the firm. From the net profit perspective, net profit plus interest cost net of tax plus depreciation plus minus changes in working capital plus your net capex will give you free cash flows to the firm. Net profits plus interest cost plus depreciation and amortization plus minus changes in working capital is nothing but your cash flow from operations, and this is your cash flow from investing. So free cash flows to the firm is cash flow from operations plus your cash flow from investing. I hope this is conceptually clear. Let's polish this.